Bitcoin and really the entire cryptocurrency industry is facing a major news event this week with the US infrastructure bill set to be voted on this Thursday. I'll break down in this video what that means. I also have some funny news stories to share for you about the hypocrisy of the system, silly economists, and much, much more. Also, we'll be taking a look at the technicals, seeing what Bitcoin is up to today. My name's Lark. Every day I make videos talking about cryptocurrency investing, so if that's a topic you would like to learn some more about, make sure you subscribe to the Lark Davis channel. And if you gently tap on the thumbs up button for the YouTube algorithm, that would be super, super awesome. Also, you can click on that notification bell so that you know when I put out a new video. By the way, every single week my team and I produce Wealth Mastery. This is a cryptocurrency investor report, basically the next best thing to have me as your personal cryptocurrency coach. Every single issue, you're going to get a deep dive altcoin report, a step-by-step DeFi tutorial, top-tier technical analysis, token sales, airdrops, interviews, my portfolio updates, and much, much more. All of that for less than $10 a week. Click on the link down below where you can learn more about becoming a member today. Now let's go ahead and take a look here at the technicals. Bitcoin just keeps putting in lower peaks. The downtrend continues for Bitcoin. You can actually look back here and the situation's a bit more dramatic when you scale out here back all the way to April. This was our peak. This is our second peak, obviously a lower peak. And basically now we have this trend line here, the green trend line here. That is what Bitcoin needs to break above. Until we do that, Bitcoin's in a downtrend. The uptrend will restart once we reconquer this green line. Now, currently, that's around $50,000. Tricky area of resistance anyway, simply by being such a big round number. Also, there is an incredible amount of Bitcoin that was transacted on chain in that area, meaning that's a major zone for people who might want to be selling, right? When the price comes back up there, they're thinking, oh gosh, I got to get out of Bitcoin. I'm just going to try to break even or take a very, very small loss. I'm going to sell my Bitcoin here. Once we pass that level, of course, it then flips around to be a strong area of price support as all those people are then in profit and potentially a lot less likely to sell. But it's a pretty important area for us at the moment. So let's see how we play out over the next few weeks here. But even looking closer in here, we can see, again, that we are just continuing to put in those lower peaks for Bitcoin. We really need to have a decent rally here to break out of that cycle. Now, if we do, of course, get lower prices, well, I think we'll continue to see that strong buying pressure coming in. We've seen really a lot of that recently. Now, what's really interesting here with the buying activity that's gone on recently is that basically it's been accumulation right across the board. Ever since we topped out here at $53,000 and had that massive, massive rejection, we saw the buyers starting to step up. Whales drank deeply of the dip, especially early on into the dip. The accounts with 10,000 or more Bitcoin, you can see here, dark blue, that's heavy accumulation right there. But it was accumulation at this point right now across the board, basically. So we can see all the accounts here in light blue, darker blue for those with less than one Bitcoin. Now, what's really encouraging as well is that strong retail accumulation in here. In order to have a good bull run, you really need to have retail involved in a very serious way. And that's smaller account holders. Mega whales, they can really move the markets, but in order to define a trend, you need to have the retail buyers on board. We can see those with less than 10 Bitcoin and those with less than 1 Bitcoin definitely stepping up the buying ever since that dip situation started to transpire, particularly those with less than 1 Bitcoin. They have been stacking sats, adding to their long-term stacks, trying to get up to their golden ticket of having 1 Bitcoin. That is a fine goal for any cryptocurrency investor, if you ask me. Now, I have also been buying Bitcoin during this dip. As I mentioned, I bought some Bitcoin at $42,500. Again, I also bought some Bitcoin at $40,000. Now, I do have some buy orders in lower. I have a Bitcoin order in at $38,000, and I have an Ethereum buy order in at $2,500. Now, those orders are just going to sit there. Maybe they get filled. Maybe we get some more FUD. Maybe people start panicking about something else in the market. The prices go down. Remember, we're still in a downtrend until we break $50,000. So a lot can happen in a downtrend, right? We need to actually have a good price breakout to start establishing a new uptrend. Haven't quite got there yet. Until that happens, I will keep those buy orders in. Now, if those buy orders fill, sweet. If they don't fill, also sweet, because that means the prices are still maintaining some strong momentum and that everything is good with the market. And if the market dips beyond those buy orders and it goes down even lower, well, I will probably buy some more at that point. This is a story. Next up, this is a story I feel pretty conflicted about, to be honest. Jamie Dimon, the head of Satan's bank, JP Morgan, he's out there saying that the price of Bitcoin could 10x in the next 5 years. I hate to say it. But I agree with him. Does he agree with me? He's come to my position. That's what I'm going to say. He's come to my position. I've been saying that the price of Bitcoin can get up to the market cap of gold for years. Jamie Dimon has been watching the Lark Davis channel. That's what's going on. No. But it's pretty interesting, though, to see these giant banking players, these super big institutional players out there flipping their opinions left, right, and center on crypto. I mean, JP Morgan, Jamie Dimon in particular, the biggest Bitcoin hater you can imagine. He was just famous for 2016, 2017, 2018 for just bashing on Bitcoin. Bitcoin's trash. I'll fire any of my traders that are trading Bitcoin. Now, of course, JP Morgan has a Bitcoin trading desk, offers it to their institutional clients, does custody for companies like, or does not custody, but does banking for companies like Coinbase. And now Jamie Dimon's out here saying that Bitcoin could 10x in the next 5 years. He's not wrong. It's not wrong. Bitcoin's going to $500,000. It's just a question of when that's going to happen. Next 5 years? That sounds about right, considering the adoption curve that crypto's going through right now. Just a matter of time, guys. Just a matter of time. I feel dirty, though. I feel dirty having to say this, but yeah, there you go. Jamie Dimon, what are you going to do? All right, next up. This is a very interesting story because I just think in light of everything that's been happening with the SEC recently, with them coming after crypto, they're coming after exchanges, they're coming after developers, they're coming after stakers, they're coming after miners, they're coming after users, they're coming after stablecoins, they're coming after everybody out in here. Here is an incredible story where the SEC just looked the other way to a massive insider trading scandal. So a few of the heads of the Federal Reserve got caught doing insider trading. Basically, they knew which assets the Federal Reserve was going to buy in advance, and then they personally bought those assets, front-running the market using insider information to do insider trading. That's illegal. Now, what's interesting here is that neither of these guys, of course, are going to be investigated for this. Neither of these guys are going to go to jail for this. They're not going to get fined for this. In fact, they've both retired. One of them says, oh, this whole insider trading disclosure distraction thing. I'm so distracted by the story, I have to retire. Come on, man. Come on. This is just one of those stories that it's one rule for them. It's a different rule for everybody else. Think about it. These criminals get to do insider trading and they just get to retire. Nothing will happen to them. Nothing will happen to them. But if you were to forget about $50 of a Bitcoin trade, the IRS is going to come crush you. If you're a developer deploying software, the SEC is coming after you. They're trying to crush regular users. Meanwhile, if you're in the club, you can do whatever you want. George Carlin said it very, very well. It's a big club, and you ain't in it. It's so true. These guys who are part of the elite, Federal Reserve chiefs, bankers, politicians, I mean, come on. The insider trading in the U.S. Congress is insane. Those guys are the best traders in the history of the universe because they all get insider information, and they trade on it, and it's disgusting. But all that stuff's legal. In this case, well, the Fed chiefs, what they did was illegal, and nothing will happen to them. Nothing will happen to them. It reminds me of this story that I covered back in, must have been 2019. Basically, the IRS came out and said that they're not going after big fish. Big financial criminals, they just don't go after them, basically. They go after little fish. They go after regular people. Because regular people, when they get a letter from the IRS saying, hey, you're under investigation, they tend to panic. They don't have a lawyer. They just say, oh my gosh, yes, IRS, I'll pay whatever I need to pay. Whereas if you go after the big fish, they got lawyers, they got time, they got money, they got resources to fight the IRS. And the IRS doesn't have the resources to fight with these people. But they can intimidate little people. It's a rotten system. The system's rotten, man. What is this? What is this? This is ridiculous. This is ridiculous. It's scandalous and it's obscene. And that's the way the system works. Final story of the day. Speaking of the scandalous and the obscene and the ridiculous, the infrastructure bill is about to go through this week, or at least the Speaker of the House, she's come out and said that, yes, they are confident that it's going to pass this week. There's going to be a vote on it this Thursday. Now, back when it was going through the Senate, this infrastructure bill got a lot of attention in the crypto space because it's a bad bill that has bad legislation for the cryptocurrency industry in it. It basically is going to redefine the definition of a broker to mean that anybody who stakes or mines or issues software, so any developers looking to develop cryptocurrency technology, because it's financial technology, will need to go and get a broker license, which is completely unworkable for all of those groups. A regular user can't get a broker license. A node operator or a miner or a software developer, it's just ridiculous. They're trying to apply laws from the 1930s on to crypto today. It's ridiculous. It's bad legislation. They fought it in the Senate. There were some very vocal senators who were out in front fighting this legislation, proposing their own legislation that would have fixed the bad wording of this language. It was shot down. There were no amendments added, and they rammed it through the Senate. Now it's over in the House. Now, once that passed the Senate, there was a few rumblings of people saying, well, we're going to try and rework the wording here. And then U.S. Treasury came out and said, look, we know that we wrote this legislation. We handed it to our patsy and he put it in the bill. But don't worry, we're not going to enforce it in the way in which we wrote it. Bullshit. You know it is BS, and I know it's BS. The U.S. Treasury Department inserted this into the bill because they know damn well what they're doing and they know damn well how they intend to interpret it. They're not making a mistake. If they had wanted different language in the bill, they would have put different language in the bill. It's that simple. Now, look, I don't want to be too dramatic about this. It is a bad thing for U.S. legislation. I think if this passes as it is, which it seems to be that it's going to pass as it is, and yeah, it's going to be a couple years before it comes into force. I get that. But I'm a long-term investor, so I'm interested in things that happen long-term for the cryptocurrency industry. And look, maybe by the time it actually gets enforced, there will be amendments to it after the bill's passed, or gosh knows what. But I know what we're seeing right now. This is what's happening. This bill is likely to be passed in its current form. Now, the silver lining of this crappy legislation that's probably going to push developers out of the USA, that's going to make the situation even suckier for your average US investor who will probably be not able to stake on exchanges anymore, for example, etc., etc. All of this stuff sucks. But the silver lining of it is that it is finally regulatory clarity. It's the most comprehensive crypto bill ever to be passed in the USA. It's just unfortunate that it's not a real bill and that it's just some crap attached to the back of the infrastructure bill, which of course is going to pass. So there's no debate anymore on the crypto segments of this. It's just been swept under the rug. All the industry leaders who were championing this cause a few weeks ago, everybody's stopped talking about it. It's not important anymore. This is just what's happening now. Yes, we will get regulatory clarity. Yes, Wall Street will like that. Yes, some of the institutional players will like that. but it's not good for the average user, which doesn't make me very happy. Oh well, looks like the US is deciding that they don't want to be the leaders of the global cryptocurrency movement and that they'd like to miss out on the next internet-like opportunity. Politicians, man, what are you gonna do? Anyway, your question for today. Do you think that there's going to be some last-minute saving movement here to get this bill amended? Or is it basically just going to go through as is? And if it does go through as is it even going to matter? Is it going to end up having any kind of negative effects on the cryptocurrency industry, or is it going to be a big fat nothing burger? Let me know your opinion down below in the comment section. Thanks so much for watching today's video, and peace out till next time.